Ever imagine yourself in a classic gold rush, but instead of pickaxes and pans, it's banks and airplanes.
Interesting image.
Yeah. Well, that's what we're diving into today.
Okay.
U.S. banks are flying billions of dollars worth of gold from London to New York.
Yeah, and it might seem kind of strange, to move all this physical gold in our digital age.
Right?
But this move is all about exploiting a price difference between the two markets.
Right. Our sources mentioned potential tariffs on European goods during the Trump administration. Did that have something to do with this price difference?
Absolutely. That possibility back then caused a dip in London gold prices while New York saw a surge. We're talking London gold dropping about $20 an ounce, while New York gold futures shot up 11%, almost hitting $3,000 an ounce.
Okay, so two major financial hubs reacting in opposite ways.
Right.
I'm guessing that's where this whole arbitrage opportunity comes in.
Exactly. Banks are essentially buying low in London and selling high in New York. Buy the rumors, sell the news. It's like that old saying.
And the profit is so good, it's worth physically flying the gold, even though it's a lot pricier than shipping by sea.
Correct. Think of it as a high-stakes, high-reward calculation. The potential profits outweigh the transport costs.
So it's like a modern-day gold rush, but with banks as the prospectors. Our sources point to JPMorgan Chase as a big player here. How much are we talking about?
JPMorgan Chase alone is looking to move over $4 billion worth of gold to New York. And they're not the only ones. HSBC and other major banks are also getting in on the action.
Wow, $4 billion. So how does this whole operation work? Do they just load up a 747 with gold bars?
Well, it's a bit more intricate than that. Banks are utilizing a pretty clever three-pronged strategy. First, they lend out gold they hold as collateral to earn interest. Second, they sell gold futures contracts in New York, essentially hedging against any potential drop in gold prices. And finally, to fulfill these contracts, they move the physical gold, capitalizing on the higher U.S. price.
That's pretty savvy. It seems like they're making money every step of the way. What kind of an impact is this having on U.S. gold inventories?
It's causing a major shift. Since Election Day 2020, U.S. gold inventories have more than doubled, soaring from $50 billion to a staggering $106 billion.
That's a huge jump. Okay,
Yeah.
I have to ask, how do they even go about transporting that much gold? It must be a logistical nightmare.
Yeah, it's quite an operation. We're talking armored trucks, specialized refineries to make sure the gold bars meet the exact size for contracts, and even commercial flights to get the gold where it needs to go. Imagine sharing a flight with billions of dollars worth of gold.
Now, that's something you don't see every day. But with all this movement, it's got to be putting a strain on the system, right?
You're right. The Bank of England, for example, is facing significant delays in processing all these gold transfers. Their vaults are working overtime.
So it's not just about financial maneuvering. There are real-world consequences, too. And this isn't just limited to London and New York, is it?
Not at all. This trend is impacting the global gold market. Bullion banks are now flying gold from Asian hubs like Dubai and Hong Kong to the U.S., a complete reversal from the traditional flow of gold eastward to places like China and India.
So the U.S. is becoming a gold magnet. What's causing this shift on a global scale? Is it all about that price difference we talked about?
That's a major factor. The gap between the prices in New York and other markets like India and China has widened significantly. This arbitrage opportunity is so lucrative that it's reshaping traditional gold trade routes.
It's like watching the map of the gold trade being redrawn in real time. And our sources suggest this gold rush might not be slowing down anytime soon. Some are even predicting gold could hit $3,000 an ounce.
That's a possibility, and if it happens, it could further intensify this gold movement. We're already seeing evidence of the impact. Delivery times for gold in London have extended from a few days to 4 to 8 weeks, indicating a shortage as more gold gets flown out.
That's a pretty big delay. So what does this all mean? Is this just a blip, or are we witnessing a fundamental shift in the gold market?
That's the big question, isn't it? And it's not just about the price of gold. There's a whole geopolitical dimension to this that we need to unpack.
That's a great point. After all, gold isn't just about money. It has always been intertwined with power and global politics. This gold rush seems to be reflecting a larger shift in the balance of global power.
Absolutely. And we can't forget those tariffs we mentioned earlier. They weren't just an economic policy, they were a power play. So how does this movement of gold fit into that bigger picture? We'll explore that in part 2 of our deep dive.
We're back, and we're digging deeper into this modern-day gold rush.
Yeah.
It's fascinating to see how something as tangible as gold is playing such a key role in the digital age.
It really highlights that despite the rise of cryptocurrencies and online transactions,
Right.
physical assets still hold immense sway,
Yeah.
particularly when it comes to global finance and geopolitics.
Exactly. We were just discussing how this gold movement might be signaling a shift in the balance of power. London, historically the heart of the gold trade,
Right.
is experiencing a gold shortage.
Yeah, that's not something you see every day.
That's not something you see every day.
It's a clear sign that things are changing.
Yeah.
Our sources mention that delivery times for gold in London have stretched to 4 to 8 weeks.
Wow.
Think about it. What used to take a matter of days now takes weeks.
That's a huge difference. The Bank of England must be feeling the pressure, too, with all these requests to move gold out of their vaults.
Absolutely. It underscores the logistical strain this gold rush is placing on established institutions. This isn't just about numbers on a screen. This is about physical gold bars being moved across continents.
And this shift is sending ripples throughout the global market, especially in major gold-consuming regions like India and China.
You're right. The price gap between the New York market and those in India and China has widened considerably. It's becoming more expensive to buy gold in those markets, which could have significant implications for their economies.
So how does this price difference connect to the geopolitical maneuvering we were talking about? Is there a link between these tariffs and the flow of gold?
There's definitely a connection. Tariffs, like those considered by the Trump administration,
Yeah.
are often used as a strategic tool to exert pressure on other countries.
Right.
They can disrupt trade relationships and even impact currency valuations.
So could this movement of gold to the U.S. be seen as a way for some countries to protect themselves from these potential economic shocks?
That's a plausible interpretation. When there's uncertainty in the global system, investors often turn to gold as a safe haven.
Okay.
It's a way to safeguard wealth against fluctuations in currencies or other markets.
It's like a financial insurance policy,
Right.
especially in times of trade wars and shifting alliances.
Exactly.
But what does this mean for everyday people? Should we all be rushing out to buy gold bars?
Hold on, not so fast. The gold market is incredibly complex, and this situation is particularly unique.
Okay.
While gold can be a hedge against uncertainty, it's not a guaranteed investment.
Got it.
Remember, context is key.
So don't bet the farm on gold just yet. But what are some key takeaways for our listener? What should they be paying attention to as this gold rush unfolds?
I think the most fascinating aspect of this is how it exposes the interconnectedness of global markets and geopolitics. What might seem like isolated economic events like tariffs or price fluctuations can have far-reaching consequences.
It's like a chain reaction.
Right.
One event triggers another, and suddenly you have billions of dollars worth of gold flying across the Atlantic.
Precisely. And this highlights the importance of understanding the bigger picture.
Yeah.
Don't just focus on the price of gold. Consider the political motivations and global power dynamics at play.
It's like a high-stakes game of chess with gold as one of the most valuable pieces on the board.
That's a great analogy. And each move has consequences.
Right.
This gold rush is a prime example of how seemingly separate realms, like economics and international relations, are intricately intertwined.
So this isn't just about money.
Right.
It's about power influence and the forces that shape our world. We've talked about the economic and logistical aspects of this gold rush, but what are the potential long-term consequences for the balance of power on the global stage?
That's a crucial question. And to understand the potential implications,
Yeah.
we need to delve into the historical context of gold's role in international relations.
Because gold has always been more than just a shiny metal. It's been a symbol of power and a tool of diplomacy for centuries. So how might this current gold rush reshape the global landscape? We'll explore that in part 3 of our deep dive. We're back for the final part of our deep dive into this modern-day gold rush, and we've talked about arbitrage logistics and even touched on geopolitics, but now I want to go deeper.
Yeah, it's a fascinating topic, and as we've seen, the movement of gold is never just about the money.
Right.
It's intertwined with history, power, and global influence.
Exactly. I mean, gold has been a cornerstone of international relations for centuries. It's backed currencies, financed wars, and even helped shape empires.
Think about the gold standard, for instance.
Right.
Decades, many of the world's leading currencies were pegged to gold,
Yeah.
giving it a central role in global trade and finance.
And even today, central banks around the world hold substantial gold reserves.
Right.
It's a hedge against uncertainty, a store of value, and a symbol of stability.
Right. So when we see a shift in the flow of gold, as we are now with this westward movement, it raises questions about potential changes in the balance of power.
Especially given the backdrop of those trade tensions and tariffs we discussed earlier.
Yeah.
Those economic policies weren't just about trade deficits.
Right.
They were strategic moves on the global chessboard.
Absolutely. Tariffs can be a tool to pressure other countries, reshape alliances, and influence global trade flows.
Right.
They can even impact currency valuations and create economic instability.
So when we see gold flowing from traditional hubs like London to the U.S., could it be that some countries are using gold as a way to buffer themselves against these potential economic and geopolitical shocks?
It's a possibility worth considering. In times of uncertainty, countries and investors often seek out safe haven assets like gold.
Okay.
It's a way to protect wealth and preserve purchasing power when other assets might be fluctuating.
So this gold rush isn't just about banks making a quick profit.
Right.
It might be reflecting a deeper anxiety about global stability and a desire to safeguard assets in an unpredictable world.
Precisely. It highlights how economics and geopolitics are inseparable. The flow of gold, the imposition of tariffs, the shifting of alliances,
Yeah.
these actions are all interconnected and influence the global landscape.
It's like a giant puzzle, and this gold rush is just one piece.
Yeah.
But understanding that piece can give us insights into the bigger picture, the forces that are shaping the world around us.
Exactly. And that's the beauty of these deep dives.
Right.
We get to explore the connections, the complexities, and the unexpected consequences of events that might seem unrelated at first glance.
This gold rush is a perfect example. We started with banks flying gold across the Atlantic, and now we're talking about global power shifts, economic strategies, and the enduring allure of this shiny metal.
And who knows what the future holds? Maybe this trend will continue reshaping the gold market and the global balance of power? Or perhaps it's a temporary blip, a reaction to specific events that will eventually subside.
Either way, it's a reminder that we live in a dynamic and interconnected world. What happens in one corner of the globe can ripple outwards, impacting markets, politics, and even the flow of gold.
So keep your eyes open, stay curious, and always be willing to dig a little deeper.
Yeah.
That's how we make sense of the world around us.
Well said. We've covered a lot of ground in this deep dive, and it's been a fascinating journey. From the mechanics of arbitrage to the complexities of geopolitics, we've explored the many facets of this modern-day gold rush.
It's been a pleasure unpacking this with you.
Likewise. And for our listener, we hope this deep dive has sparked your curiosity and given you some food for thought. Remember, the next time you hear about a gold rush, don't just picture prospectors with pickaxes. Think about the airplanes, the banks, the global forces at play. It's a reminder that even in our digital age, the movement of physical goods can tell us a lot about the state of our world. Keep exploring, keep questioning, and until next time, happy digging.